Alibaba just claimed benchmark parity with Anthropic's best model, and Hong Kong marked the shares up 7% on it. 4 more stories moving the AI tape today. Let's get into it. Alibaba unveiled Qwen 3.8 Max on Monday. 2.4 trillion total parameters, but a mixture of experts' design that activates only about 9 billion per request. Published benchmarks show it matching or beating Anthropic's Fable 5 on several evaluations, and outranking Moonshot's Kimi K3. Shares rose 7% in Hong Kong, and the US ADR added 4% to $127.70. The sparse activation is the real story here, because it is a cost structure, not just a capability claim. It lets Alibaba credibly undercut US frontier pricing, and open weights are due next week, which turns that discount into direct pressure on every American lab's API line. The bear case. These are self-published benchmarks, and the headline demo, a model spending 16 days autonomously building a coding tool, is an internal test nobody outside Hangzhou has reproduced. The signal is next week's weights drop. If independent evaluations hold, expect API price compression across the board. If they don't, this was a Hong Kong rally, not a frontier event. OpenAI named its next model family Astra and announced it not with a benchmark chart, but with a 249-page manuscript. 10 results resolving or substantially advancing problems open for at least a decade, including the first explicit non-sofic group and the first improved sphere-packing exponent since 1978. Every proof ships with a Lean-4 certificate, machine checkable on a laptop. The economics are the investor story. OpenAI estimates the tokens cost roughly $2,000 at Sol API rates, which reframes frontier research output as a compute line item rather than a scarce talent constraint. Fields medalist Timothy Gowers said he would recommend one of the proofs to Annals of Mathematics without hesitation. The bear case is history. OpenAI's late 2025 Erdos claim collapsed when the solutions turned out to already exist in the literature. And Astra is not released. It is slated to be the first model through US government pre-release review. Watch that timeline. Every week, Washington spends reviewing as a week Alibaba ships open weights. London-based OLIX raised $312 million in a Series B, at a $3 billion valuation, up from $1 billion in February. That is a 3 times markup in 6 months. The company builds optical tensor processing units, which use light rather than electricity to run inference math, and ships them as complete racks, with its own chips, lasers, and interconnect. The cap table is the signal. ARM took a position in a photonic inference architecture, alongside the UK's sovereign AI venture fund, Hudson River Trading, and Reed Hastings. That is ARM hedging against NVIDIA'S grip on inference, with a government underwriting the hedge. The bear case. Photonic computing has promised exactly this for a decade and has never shipped at scale, and $3.3 billion is a large number for pre-revenue rack systems. Vertical integration concentrates the execution risk into one company. The next read is a named hyperscaler deployment. A production inference contract validates the thesis. Another markup without one is momentum, not adoption. Palantir reports after tonight's close with consensus at $1.81 billion in revenue, up 80% year over year, and 30% of EPS. AMD follows Tuesday at roughly $11.3 billion and $1.61. The asymmetry is what stands out. Palantir has beaten EPS 8 straight quarters, and the stock still sits near $123, about 40% off its high, with options pricing a 12% post-print swing. These are the AI names without a cloud business underneath to absorb a miss. The hyperscalers have already cleared, and NVIDIA does not report until August 26th, leaving 3 weeks where the second tier sets sentiment for the entire trade. The bear case is in that gap itself. 8 consecutive beats and a 40% drawdown says the problem is the multiple, not the execution. Oppenheimer expects full-year guidance lifted above 75% against the current 71% outlook. Above that, AI software re-rates. Below it, the D-rating carries straight into AMD's MI350 print Tuesday. The EU AI Act's Article 50 transparency obligations took effect Sunday, and California's AI Transparency Act hit its operative date the same day by design. Chatbots must self-identify, deepfakes must be watermarked, and penalties run up to 15 million euros or 3% of worldwide annual turnover, whichever is higher. Here is what actually changes. The duties land on deployers, not just the labs, which widens the compliance base from a dozen model companies to essentially every enterprise shipping an AI feature in Europe. California's parallel regime covers generative providers above 1 million monthly users and requires free detection tools. The bear case: enforcement is untested, and systems already on the market before August 7th until December 2nd to meet the machine-readable marking requirement. So, the teeth arrive months after the headline. Watch the first Article 50 enforcement action. If it targets a deployer rather than a lab, every enterprise AI roadmap in Europe reprices overnight. One through line today: the frontier is getting cheaper and more crowded at the same time. Alibaba is undercutting on price, OpenAI on compute cost, OLIX on physics, and Brussels is putting a label on all of it. Subscribe for tomorrow's briefing. This is the Daily Alpha.